Hello CMA Final students. For December 2025 exams in 100% English, let us start doing the revision. First, I am going to revise transfer pricing. Transfer pricing is such an important chapter. Minimum you can expect 16 marks from this chapter. Not less than 16 marks will come in the exam, and maximum up to 30 marks you can expect from this chapter. In one attempt, almost 30 marks are asked. That means if you prepare transfer pricing, you are half pass, okay, in direct taxation. That much important this chapter is. So listen to this transfer pricing revision very carefully. I'll share the PDF, my question bank. You do all the problems, and I'm going to explain June 25 exam question paper. Please listen that lecture also. Whatever I'm saying, okay, all the revision lectures please follow. I'm going to share the question banks. Please do all the problems sufficient. You will definitely clear CMA final direct taxation in December 2025 exams. Okay, whatever I say you follow. I will see why you will not pass. Okay, another important thing, right now when I'm revising transfer pricing, I'm going to write the notes, right? Whatever the notes that I have written, entire that notes, I'm going to write the notes, right? Entire that notes will be available in my website www.phoenixbyuma.com. I can show you. So this is my website. In my website, there is one tab called free resources. You can go to free resources tab. You can select the course CMA final. See, right now I am doing revision in Telugu plus English language and 100% English language. Whatever the revision notes is there, entire revision notes I am sharing in my website. See, for Telugu plus English, transfer pricing revision is over. That PDF is available. You can check running notes transfer pricing. That PDF is available. You can download and you can go through the revision notes. Okay. Similarly, for 100% English also, there is one tab, 100% English. I already done question paper analysis, tax audit. In this tab, I am going to upload transfer pricing 100% English revision notes as well. You can download the running notes from the website. Okay. So shall we move ahead? Everybody. Yes, let us start. First of all, sir, why transfer pricing we need to study? Why transfer pricing provisions are introduced? I will not take much time. In 2 to 3 minutes, I will explain why transfer pricing came. Okay, what is the necessity to study transfer pricing? Let us take one small example, Nestle. Let's say there are two companies, Nestle Inc. USA and there is Nestle Limited. This is an Indian company. In USA, let's say tax rate is 10%. In India, let's say tax rate is 30%. Now, Nestle Inc. holds 80% shareholding in Nestle India Limited. See, once one company holds 80% shareholding in another company, both are related parties now, because if one company holds 80% of the shareholding in another company, entire management will be done by this company only. So here Nestle Inc. USA and Nestle Limited India both are related parties. Now what happened? Nestle Limited purchased goods worth rupees 100 crores. How much worth of goods are purchased? 100 crores worth of goods are purchased, but billed is equal to rupees 150 crores. That means in reality 100 crore worth of goods are purchased, but while passing the entry, while raising the invoice, for how much amount invoice was raised? Invoice was raised for 150 crores. Whenever invoice is raised for 150 crores, normally, ideally, when you prepare P&L account, how much you need to write purchases? 100 crores. But are they writing purchases 100 crores? No. How much they are billing? They are billing it for 150 crores. That means whether purchases increased or purchases decreased, they have increased the purchases. How much purchases were increased by 50 crores? Whenever purchases increases, automatically expenditure increases. Expenditure increases by 50 crores. Whenever expenditure increases, net profit decreases. Correct? See, when expense increases, our profit falls down. So net profit decreases by 50 crores. If net profit falls by 50 crores, how much tax was automatically, tax will also get reduced, right? How much tax gets reduced? In India, tax rate is 30%. 50 crores profit reduced. How much tax will be saved? 50 crore into 30%. 15 crores. Correct? So, tax saved, tax decreased is 15 crores. Correct? Okay. This is the story from Nestle Limited India. Now, let us see the story of Nestle Inc. USA. Nestle Inc. USA, it will also prepare its P&L account, right? In its P&L account, how much are actual sales? Actual sales are 100 crores. But is it showing actual sales of 100 crores? No. It is showing billed sales. Billed sales of 150 crores. That means here there is increase in sales now. How much is increase in sales? 50 crores. Whenever sales increases, automatically income increases. Income also increases by 50 crores. Net profit also increases. That's what, right? Whenever income increases, net profit also increases. Net profit also increases by 50 crores. Whenever net profit increases by 50 crores, then tax will also increase. But what is the tax rate in USA? Tax rate in USA is 10%. So how much will be the tax increase? 50 crores into 10%, 5 crores. Okay, that means increase in tax of 5 crores, decrease in tax of 15 crores. Overall, what is the net effect? Overall reduction in tax liability. Overall reduction in tax liability. How much? 10 crores. That means globally 10 crores tax is saved. Are you able to understand? So what is happening? Related parties, whenever they are doing cross-border transactions, whenever they are doing international transactions, intentionally they are booking extra expenditure in countries where tax is higher. If tax is higher, intentionally they are raising expenditure. When they raise expenditure, their profits decrease and they will pay lower tax. And conversely, where tax rate is low, there they are booking higher profits. If higher profit is there, lower tax rate is there. Overall, lower tax will be there. So, internationally, MNCs, multinational companies, which are having businesses across different countries, what they are doing, they are intentionally influencing the price. Okay, they are not showing the correct price, they are showing higher expenditure in country where tax is more, and they are showing lower expenditure in country where tax is less. Are you able to understand? In this way, globally they are not disclosing correct price for transaction, they are influencing the transaction price, and thereby they are reducing their overall taxes. Are you able to understand? So but think from Indian government point of view, how much is the expenditure? Expenditure is only 100 crores. But whether 100 crores was booked, 150 crores was booked as expenditure, right? So what Indian government said, whenever you are doing transaction with related party na, at that time, I will not consider actual transaction. Actual transaction, they will not consider. But what they will consider? They will consider like Indian government is going to calculate arm's length price. What do you mean by arm's length price? See, you are selling to your related party. If the same goods are sold to unrelated party, what is the price that you will charge? That will be taken as arm's length price, and accordingly net profit will be calculated. Are you able to understand? So whenever you are buying goods from your related party, obviously price will be influenced, correct? So when you purchase goods from unrelated party, price is not influenced na. So even though you purchase from related party, unrelated party price will be taken and net profit will be calculated. That concept we call as transfer pricing. Whenever you are transferring goods or whenever you are doing transaction with related party, international transaction, in that case, like actual transaction they will not consider, they will calculate fair transaction, fair price, arm's length price. Are you able to understand? That's how the concept of transfer pricing came into existence. Okay, so in this case they will not consider actual price, what they will consider is arm's length price. Are you able to understand? So in two lines, all multinational companies doing transaction with their related parties and globally they are reducing their tax liability. To counter such kind of activities, transfer pricing provisions are introduced. Whenever you do transaction internationally with related parties, actual price will not be considered, arm's length price will be calculated, fair price will be calculated, based on fair price net profit will be calculated. Okay, so the concept of calculating fair price and considering it in calculation of net profit we call as transfer pricing. Are you able to understand? Next, when transfer pricing provisions are applicable, there is one section, section 92. When transfer pricing provisions are applicable. See, section 92 is basically charging section. Okay. Section 92 is charging section. Section 92, first of all, there is one section called 92A. In 92A, we are going to discuss about what associated enterprise means. Are you able to understand? See, if you buy goods from unrelated party, transfer pricing provisions are not applicable. If you sell goods to unrelated party, transfer pricing provisions are not applicable, because whenever you are doing transaction with third party, unrelated party, okay, no influence will be there, but only if you do transaction with your related party, then only you will influence the price. So only when you are doing transaction with associated enterprise, then only transfer pricing provisions are applicable. What like whom we call as associated enterprise, that I will discuss with you. Which section explains associated enterprise? Section 92A explains associated enterprise. So like there should be two or more associated enterprises. Sir, what do you mean by associated enterprise? I will discuss little later. Okay, just after 3-4 minutes I will discuss what associated enterprise means. Okay, next, section 92B. Section 92. Section 92B says, first of all, transaction should happen in between two or more associated enterprises, and such a transaction should be international transaction. Such a transaction should be a international transaction. Such a transaction should be a international . Okay, here what is important is international transaction. Okay, third one, 92C. Then such a transaction value shall be computed at arm's length price. So very simple. First of all, three conditions. Only if transaction takes place between one or more associated enterprises, then only transfer pricing provisions are applicable. So only if transaction is done with associated enterprise, then only transfer pricing applicable. If transaction is done with unrelated party, transfer pricing is not applicable. Second, whatever the transaction with associated enterprise is there, it should be international transaction. Sir, what do you mean by international transaction? I will explain. Okay, so only in case of international transaction, transfer pricing provisions are applicable. Next, if any international transaction is entered with associated enterprises, then actual transaction value is ignored. In place of actual transaction value, transfer pricing like arm's length price will be calculated. So section 92C speaks about calculation of arm's length price. Section 92B speaks about international transaction. Section 92A speaks about what associated enterprise means. Okay. Now let us discuss one by one. First, I will discuss what international transaction means. Next, I will discuss what associated enterprise means. Next, I will discuss how to calculate arm's length price. Okay. First, section 92B, international transaction. When you call a transaction as international transaction, transaction between two or more associated enterprises. Two or more associated enterprises, and at least one should be a non-resident. And at least one should be a non-resident. What do you mean by this? For example, there are two parties, A, B. Now, both A and B are associated enterprises. A is resident in India, B is also resident in India. Now, the transaction between them, can you call it as international transaction? No, you cannot call it as international transaction. Can you call it as international transaction? No. Why? What I said, transaction should take place between two or more related parties. Here related parties means for the time being associated enterprises. Okay, so transaction is happening between associated enterprises, but both associated enterprises are resident in India. If they are resident in India, then can you call it as international transaction? No, you cannot call it as international transaction, because what definition says, to call a transaction as international transaction, transaction should happen between two or more associated enterprises, and out of them one should be non-resident. Then only it will be called as international transaction. Next, A is resident, B is non-resident. Now can you call this as international transaction? Yes, because B is non-resident. Are you able to understand? Transaction is happening between two associated enterprises, A and B, but B is non-resident, so we can call this transaction as international transaction. Next, A is non-resident, B is resident. Now can you call this transaction as international transaction? Yes, because A is non-resident. Next, A is non-resident, B is also non-resident. Now can you call this as international transaction? Yes, transaction is happening between two associated enterprises, A and B, and both are non-residents. Criteria is at least one should be non-resident. In this case, both A and B are non-residents. Are you able to understand? So like in this case, the transaction is also called as international transaction. So to call a transaction as international transaction, it should happen between two associated enterprises or more than two associated enterprises. Out of them, one should be non-resident. Then only we call such a transaction as international transaction. Is it clear? Sir, till now you are saying transaction. What do you mean by transaction? Transaction can be, that means whatever the transaction between associated enterprises is there, the transaction can be purchase transaction, or the transaction can be sale transaction, or the transaction can be service transaction, or the transaction can be expenditure transaction, or the transaction can be lending, That means one associated enterprise is giving loan to another associated enterprise. That is also transaction. Fair rate of interest should be charged. If lower rate of interest is charged, difference will be treated as income. Okay, borrowing transaction. If any rental income is there, that is also transaction, rental income or expenditure. Even allocation of cost is also treated as transaction. What do you mean by this? Let's say head office will do research and development cost. Whatever R&D cost is there, it is allocated to all branches also. So Nestle head office is located in USA. It has done research and development. Whatever research and development cost is there, that cost is apportioned to subsidiary Nestle India Limited. Even that apportionment of cost should happen at fair transaction, should happen at fair level. For that also we are going to calculate arm's length price. So almost every business transaction, okay, it should happen at fair transaction, it should happen at fair price, okay, that we are going to calculate as arm's length price. So international transaction, transaction between two or more associated enterprises, out of them one should be non-resident in India. And nature of transaction can be either purchase transaction, sale transaction, service transaction, expenditure transaction, lending transaction, borrowing transaction. Even allocation of cost is also treated as transaction. That means in all these cases, that means if all these transactions are done with related parties, if all these transactions are done with associated enterprises, actual price we will not consider. We will calculate arm's length price. Based on arm's length price, we are going to calculate income of the SSC. Are you able to understand? Section 92A, who is called as associated enterprises. Associated enterprise. Let's say there are two companies, A Limited, B Limited. A Limited, if A Limited holds 26% shareholding, either greater than 26% or equal to 26%. If A Limited holds greater than or equal to 26% shareholding in B Limited, then both A Limited and B Limited will be treated as associated enterprises. That means when can we call two companies as related parties? When can we call two companies as associated enterprises? If one company holds either 26% shareholding or more than 26% shareholding in another company, then both companies will be treated as associated enterprises. Now you will get one doubt. Sir, 26% shareholding, like whether the shareholding should be there for total 365 days? No, even for one day, if there is 26% shareholding sufficient for that year, both the entities will be treated as associated enterprises. A Limited hold 26% shareholding in B Limited on only one day in previous year 24-25, sufficient. Both A Limited and B Limited will be treated as associated enterprises. Are you able to understand? So this 26% shareholding can be at any time during the previous year, at any time during the previous year. So at any time during the previous year, if one entity holds more than or equal to 26% shareholding in another entity, then both entities will be treated as associated enterprises. Are you able to understand? Next, whatever this shareholding is there, this shareholding can be direct shareholding or indirect shareholding. Sir, what do you mean by direct shareholding and what do you mean by indirect shareholding? I'll tell you. A Limited, B Limited, C Limited. A Limited holds 75% shareholding in B Limited. That means A Limited holds more than 26% shareholding, right? So A Limited and B Limited are treated as associated enterprises. Now, B Limited holds 60% shareholding in C Limited. That means B Limited holds more than 26% shareholding. In this case, B Limited and C Limited are associated enterprises. That means indirectly A Limited is holding how much shareholding in C Limited? A Limited holds 60 into 75%, 45% shareholding. A Limited holds 45% shareholding. 45% shareholding means more than 26% shareholding. In this case, A Limited and C Limited, they are also treated as associated enterprises. That means what? A Limited need not have direct shareholding, even though through subsidiaries. Indirectly also, if one company have shareholding in another company, then also both will be treated as associated enterprises. Are you able to understand? So if one company holds either 26% shareholding or more than 26% shareholding in another company, then both companies will be treated as associated enterprises, and that 26% shareholding can be at any point of time during the previous year. Are you able to understand? And the 26% shareholding can be direct shareholding or indirect shareholding. Is it clear? So case 1, case 2. No, case 2 I will explain. Next, case 2. There is Baba Limited. Now, there is Baba Limited, Agni Limited and Vayu Limited. Baba Limited holds more than 26% shareholding in Agni Limited. In this case, Baba Limited and Agni Limited will be treated as associated enterprises. Okay, next, Baba Limited holds more than 26% shareholding in Vayu Limited. In this case, Baba Limited and Vayu Limited are treated as associated enterprises. In this case, Baba Limited holds more than 26% shareholding in Agni Limited and it also holds more than 26% shareholding in Vayu Limited. Now, both Agni Limited and Vayu Limited are also treated as associated enterprises. Are you able to understand? That means if one person holds more than 26% shareholding in two entities, then both of those two entities are also treated as associated enterprises. Are you able to understand? Next, third point, third case. There is AHA Limited and there is OHO Limited. Okay. AHA Limited and OHO Limited. AHA Limited appoints more than half of the board of directors or one executive director of OHO Limited. In this case, AHA Limited and OHO Limited are treated as associated enterprises. That means what? This is management control. Management control. So, if one company controls management of another company, if one company holds, like if one company appoints at least half of the board of directors or one executive director of another company, then both companies will be treated as associated enterprises. Whatever we have seen previously, this 26% shareholding, this is direct control. Sorry, this is capital control. Capital control. What we have seen just now, this is not capital control, that is management control. So if one company controls another company either through capital or through management, then both companies will be treated as associated enterprises. Okay. Fourth case. There is A Limited, there is B Limited and there is C Limited. A Limited appoints more than half of the board of directors or one executive director of another company, B Limited. A Limited appoints more than half of the board of directors or one executive director of C Limited. In this case, A Limited and B Limited are treated as associated enterprises. A Limited and C Limited are treated as associated enterprises. In this situation, even B Limited and C Limited are also treated as associated enterprises. Are you able to understand? So did you understand the scenario? In this situation, B Limited and C Limited are also treated as associated enterprises. Case 5. There is Kim Limited. You know Kim Mama, right? And there is a Trump Limited. Kim Limited gives loan to Trump Limited. How much is loan? Loan is 500 crores. Now, how much are total assets of Trump Limited? Total assets of Trump Limited are 800 crores. Now, how much percentage of loan is given as a percentage of total assets? Percentage of loan is equal to 500 crores divided by total assets 800 crores into 100. How much? 62.5%. That means if one entity gives loan to another entity and the amount of loan is like greater than 51%. Okay, here 62.5% means greater than 51%. So if loan given by one company to another company, amount of loan given, percentage of loan given, if percentage of loan given is more than 51% of total assets of another company, then also both companies will be treated as associated enterprises. Are you able to understand? Sixth one. There is Modi Limited and there is also Kim Limited. Now, Kim Limited total borrowings are 700 crores. Modi Limited gave guarantee for 200 crores. Gave guarantee for 200 crores. That means in this situation, how much worth of borrowings are guaranteed? 200 crore divided by 700 crore into 100. How much percentage of borrowings are guaranteed? 200 by 700 into 100, 28.57%. It is more than 10%. That means if one company gives guarantee for borrowings taken by another company and percentage of guarantee is more than 10%, then also both will be treated as associated enterprises. Are you able to understand? Here, that means if one company guarantees either greater than or 10% of borrowing, okay, guarantees greater than or equal to 10% of borrowing of another company, then also both will be treated as associated enterprises. Are you able to understand? Seventh case. There is Hero Limited and there is also Honda Limited. You know, once upon a time, Hero used to manufacture cycles. Hero cycle. Okay. Honda generally manufactures bikes, cars and all. So Hero Limited India, Honda Limited Japan, both got merged. Like both formed a joint venture. So now what's happening? Like Hero Limited is Hero Honda Limited. Now Hero Honda Limited is manufacturing bikes. Hero Honda is manufacturing bikes. For manufacturing bikes, whatever the technical know-how is there, entire intangibles are given by Honda Limited, and Hero Limited will manufacture in India bike and it will sell in India. That means here what is happening? Hero Limited entire business depends upon intangibles given by Honda Limited. In this case, Hero Limited and Honda Limited are treated as associated enterprises. That means if one company's entire business is dependent upon intangibles shared by another company, then both these companies will be treated as associated enterprises. Are you able to understand? So that's what. If one company entirely depends upon trademarks, patents, copyrights of another company, then both companies will be treated as associated enterprises. 8. There is Haha Limited and there is Kaka Limited. Now, goods manufactured by Haha Limited are sold to Kaka Limited. So here who is seller? Haha Limited is seller, Kaka Limited is buyer. Generally, who will influence the price in a transaction? Who will influence the price? Seller. Who will decides price? Seller decides price or buyer decides price? You wanted to buy iPhone. Whether seller will tell the price or you will tell the price. Generally, seller will tell the price. Apple will tell one iPhone is 1 lakh rupees. You cannot say please sell Apple iPhone 17 at 50,000 rupees. You cannot say like that. Always it is the seller who will determine the price, who will decide the price. But if buyer influences the price, if buyer decides the price, then something fishy. Okay, buyer should not decide the price, but in any transaction, if buyer is influencing the price, then something fishy. They are doing some unlawful, they are doing some activity which is against, earning profits. So that's why, like, if buyer decides the price, if buyer influences or decides the price, if buyer influences or decides the price, then also like both entities will be treated as associated enterprises. Then Haha Limited and Kaka Limited will be treated as associated enterprises. That means what? Very simple. In any transaction, you will read the agreement, right, in between seller and buyer. If buyer determines the price or if buyer influences the price, then both the entities will be treated as associated enterprise. Next. 9. There is Bahu Limited and there is Balla Limited. Now, Bahu Limited manufactures tires. What is major raw material for manufacturing tires? Major raw material is rubber. Correct. Now, 90% of raw material required for Bahu Limited for manufacturing tires is purchased from Balla Limited. Purchased from Balla Limited. In this case, Bahu Limited and Balla Limited are treated as associated enterprises. Are you able to understand? So, if one company buys either 90% of raw material or more than 90% of raw material from another company, in this case, both companies will be treated as associated enterprises. Are you able to understand? There is me, Uma, and there is Uma Limited. Okay. Now, let's say I am having 90% shareholding in Uma Limited. That means I am having more than 26% shareholding in Uma Limited. Correct? That means I am holding more than 26% shareholding. Next, there is my relative. Relative means either, let's say my mother is there. My mother is having 85% shareholding in her company Manga Limited. Okay, in this case, Uma Limited and Manga Limited are treated as associated enterprises. That means if one individual is having 20% or more than 20%, 26% shareholding in another company, and his relative, he is also having more than 26% shareholding in another company, both companies will be treated as associated enterprises. Here Uma is having more than 26% shareholding in Uma Limited. Manga is also having more than 26% shareholding in Manga Limited. Uma Limited and Manga Limited both are treated as associated enterprises. Are you able to understand? Sir, relative means who? Relative can be either spouse, mother, father, brother, sister, lineal ascendant, lineal descendant. All these will be treated as relatives. And see, sir, only shareholding, only capital control? No. Like Uma can appoint more than half of board of directors or one executive director of Uma Limited. That means here one person should have control in another company. That control can be either capital control or management control. Same, his relative also should have control in another company. Control can be either capital control or management control. Very simple. One individual is having control in one company, his relative is having control in another company. Now both these companies will be treated as associated enterprises. Okay. There is HUF and there is Rama Limited. HUF holds more than 26% shareholding in Rama Limited. That means what? HUF controls Rama Limited, and that control can be either capital control or management control. That means HUF is holding 26% shareholding in Rama Limited, or HUF appoints more than half of the board of directors or one executive director of Rama Limited. Now, member of HUF is controls Bhima Limited. In this case, Rama Limited and Bhima Limited both are treated as associated enterprises. Are you able to understand? That means if HUF controls one company and relative of HUF controls another company, both companies will be treated as associated enterprises. Are you able to understand? Last case, 12th case. Let's say there is a person. That person holds greater than or equal to 10% of profit sharing ratio, either in partnership form or LLP or AOP, BOI, AJP. Then both will be treated as associated enterprises. That means what? Let's say I had 30% share in a partnership firm. I and partnership firm both will be treated as associated enterprises. So if a person holds either 10% of profit share or more than 10% of profit share in another entity, that can be either partnership firm, LLP, AOP, BY, then that person and that entity both will be treated as associated enterprises. Are you able to understand? So these are 12 different cases of associated enterprises. Are you able to understand? So we have discussed what international transaction means. We have discussed what associated enterprise means. Next, we are going to discuss what arm's length price, how to calculate arm's length price. Section 92C. computation of arm's length price. So there are 5 methods to calculate arm's length price. First, comparable uncontrolled price method. In short, we call this as cup method. Okay. Second one is resale price method. In short, we will call this as RPM, resale price method. Third, cost plus method. In short, we will call this as CPM. Fourth, profit split method. In short, we call this as PSM. Last one is transactional net margin method. Transactional net margin method. In short, we call this as TNMM method. So there are 4 methods to calculate arm's length. First, very important, comparable uncontrolled price method. Many times this method is asked in the examination. Next, I am going to explain how to calculate arm's length price under cup method, comparable uncontrolled price method. I will take one example. Through that example, I am going to explain. There is A Limited, there is B Limited, and there is C Limited. A Limited holds 60% shareholding in B Limited. So can we call A Limited and B Limited as associated enterprises? Yes, because A Limited is holding 60% shareholding, which is more than 26% shareholding in B Limited. Both are treated as associated enterprises. However, C Limited is unrelated party. Unrelated party. Next. A Limited sold 10,000 units to B Limited for rupees 2,000. Same A Limited sold 4,000 units to C Limited for rupees 3,700. Tell me one thing, for related party, for associated enterprise, goods are sold only for 2,000 rupees. For unrelated party, goods are sold for 3,700. That means intentionally they are sold at lower price. Why they are selling at lower price? Because if sales price reduces, sold for 2,000 rupees only for related party. If they sell for 3,000, sales increase, profits also increase. To reduce profits, they sold at lower price of 2,000 rupees. Are you able to understand? That means what? With related party, goods are sold at lower price. With unrelated party, goods are sold at higher price. So the main agenda, the main intention is reducing sales, reducing profits, and thereby reducing tax liability. So like here, comparable uncontrolled price method means just like how you are billing to unrelated party, in the same way you have to bill for related party also. So let's say I am selling goods to my father, I am also selling goods to third party. Whatever the price I take from third party, same price I also have to take from my father. Okay, so whatever the actual price that is there between me and my father, that will be ignored, and third party, with the third party, whatever the price I charged, that will be taken as arm's length price. Are you able to understand? So comparable uncontrolled price method means like whenever you are doing transaction with related party, party transaction will be ignored, and unrelated party with comparable uncontrolled transaction. See, when you do transaction with third party, it is uncontrolled transaction only. So whatever the transaction with third party is there, whatever the uncontrolled transaction is there, we will take uncontrolled transaction and we will compare actual transaction and uncontrolled transaction. Thereby we are going to calculate arm's length price. Here actual transaction is 2000 rupees, correct? But comparable transaction is 3700. So we will compare these two and we are going to calculate arm's length price. Are you able to understand? Now, you cannot say, sir, here arm's length price is 3700 rupees. You cannot say straight away like that because there can be some functional differences. See, here 10,000 units are sold, here only 4,000 units are sold. Whenever you sell goods, lump sum goods in quantity, you will give more discount, correct? So you cannot compare 10,000 units with 4,000 units, okay? Because whenever more goods are sold, more discount will be given. See, you are comparing two cars. You can't compare Bellona with Innova Krista. Bellona is 5-seater, Innova Krista is 7-seater. How can you compare 5-seater car with 7-seater car? Not possible, right? In the same way, here also, for related party, you sold 10,000 units. For unrelated party, you sold only 4,000 units. So you cannot compare 10,000 units with 4,000 units. Now, the point is, here, if 10,000 units are sold to unrelated party, sold to C Limited, then how much will be the discount? Additional discount is 400. Additional discount is 400. Are you able to understand? That means what? For unrelated party also, if A Limited sells 10,000 units, how much discount A Limited would have given? A Limited would have given 400 rupees discount. So that is functional difference. We need to adjust functional difference and we need to calculate arm's length price. Second functional difference. Second functional difference can be freight on board or CIF. See, there are two terms, FOB, CIF. Freight on board, CIF. Freight on board means what? Goods are brought only to the port. Let's say I am buying goods from USA. Goods will not be delivered in my location. Goods will be brought to USA port. Are you able to understand? So, goods till seller's port. If goods are brought till seller's port, then we call it as freight on board. If goods are brought to buyer's port, see, let's say I am importing goods from USA. I paid 1 lakh rupees. For that 1 lakh rupees, goods are shipped and they are transported to Mumbai airport. So that means what? Whatever the air charges or whatever the water transportation charges, insurance and freight both are borne by that seller only. Then we call it as CIF. Okay, insurance and freight will be borne by seller. But in case of FOB, seller will not bear insurance and freight. Seller will bring goods till his port. From there onwards, we need to transport the goods. We need to pay insurance and freight. Are you able to understand? So freight on board means what? Till seller's port. CIF means what? Till buyer's port. Are you able to understand? In case of freight on board, transportation charges, freight and insurance are required to be paid by buyer only. However, if in case of CIF, freight and insurance will be paid by the seller. Are you able to understand? For example, for related party, goods are sold on freight on board. How much? Hold on. For unrelated party, goods are sold on freight on board. And for related party, goods are sold on CIF basis. Freight on board means what? He will not bring goods to our country. In his country's port only, goods will be delivered. Okay, from there onwards, we need to pay insurance and freight. For unrelated party also, if goods are sold at CIF, additional charges will be 250 rupees. That means what? In case of related party, goods are sold on freight on board basis. In case of unrelated party, see, For example, C Limited is unrelated party. Let's say he is located in Germany. Till Germany port, goods will be sent by us. Whatever the water transportation charges, insurance and freight, they will be borne by us only. Are you able to understand? So that is the difference between FOB and CIF. Now the point is, tell me in this whole transaction, what is the uninfluenced price? 2000 rupees is influenced price, right? Because whenever I do transaction with related party, obviously that price is influenced price. So whatever this 2000 is there, that is influenced price, and whatever this 3000 is there, that 3000 is uninfluenced price, correct? So when you are calculating arm's length price, what you need to take as base is, you will take uninfluenced price as base. How much is uninfluenced price? Uninfluenced price is 3700, correct? And this uninfluenced price is for 4000 units. If 10,000 units are sold, how much additional discount was given? Additional discount of 400 will be given, correct? So what is uninfluenced price for 10,000 units? If 10,000 units are sold, discount will be given. How much is the discount? Discount is 400, correct? Then 3,300. This 3,300 is uninfluenced price, but at 10,000 units, correct? 10,000 units. So we need to compare both the transactions. To compare both the transactions, they should be brought into ideal terms. Okay, unrelated party 4,000 units, related party 10,000 units. For unrelated party also, if goods are sold at 10,000 units, then you can compare both of them na. So that's why even though unrelated party, for unrelated party 4,000 units are sold, if 10,000 units are sold, how much is the uninfluenced price? We need to do the functional adjustment. Here reduction of discount we call as functional difference. Are you able to understand? Next, second functional difference is there. This uninfluenced price is at freight on board. See, for related party, we are selling at CAF basis, cost, insurance and freight. For unrelated party, we are selling goods at freight on board. For unrelated party also, if goods are sold at CAF basis, how much extra we charge? Additional charges 250 rupees. That we need to adjust, add additional charges. Additional charges 250 rupees. So then we are going to arrive at uninfluenced price at CIF level. How much? 3,550, correct? So now did you understand? When you are comparing both the transactions, if there are any functional differences, you have to give adjustment for functional differences. Okay, obviously for unrelated party, same quantity we will not sell. So for related party, how many goods are selling? Same goods, if they are sold to unrelated party, how much will be the discount? That we will adjust. Okay, like that. If there are any functional differences, warranty, for related party warranty is given, for unrelated party warranty is not given. For unrelated party also, if warranty is given, how much then price will increase? How much is the increase in price? Those kind of functional differences we need to do. After doing functional differences, we are going to arrive at arm's length price. So here arm's length price is 3,550. But what is the actual sale price? Actual sale price. Actual sale price. For related party, they are sold for 2,000. Actual sale price is 2,000. Correct? Now, how much is the difference? Difference is 1,550. This will be added to income of the SSC. Income of. Are you able to understand? Very simple. So in case of comparable uncontrolled price method, uninfluenced price with unrelated party, whatever the price is there, take that price, do functional adjustments. Okay, after doing functional adjustments, you are going to arrive at arm's length price. Compare arm's length price with actual price, you are going to arrive at income that is required to be added. Are you able to understand? Now let's do one problem in institute workbook. See, this is institute workbook. You can download from the website. Open illustration 5. In class, I have discussed one point. There is a company and there is a person in notified jurisdictional area. Notified jurisdictional. Whenever a transaction is done with a person in notified jurisdictional area, then both will be treated as associated enterprises. See, there is one country called Cyprus. That country used to not support India. Whenever Indian government asks Cyprus give some information, Cyprus will not give information. So what Indian government did? Indian government declared Cyprus as notified jurisdictional area. So any person in India, if they do transaction with a person in Cyprus, then every transaction will be treated as international transaction and both entities will be treated as associated enterprises. That means whenever you do transaction with a person located in notified jurisdictional area, both will be treated as associated enterprises. Are you able to understand? This concept I explained in class also, if you remember. Whenever you do transaction with a person located in notified jurisdictional area, both will be treated as associated enterprises. Now, let us see further. Xenon India Limited, an Indian company, sold goods on 15 January 25 to M Corp, a company located in notified jurisdictional area, for 9.8 crores on FOB basis. So, there are two companies. Xenon India Limited and there is another one, M Corp. It is located in notified jurisdictional area. It is located in India. Both will be treated as associated enterprises, right? Because whenever transaction is done with a person located in notified jurisdictional area, both will be treated as associated enterprises. Now, sold goods. How much is sale value? Sold goods for 9.8 crores. And how goods are sold? Goods are sold on FOB basis, freight on board basis. During same financial year, identical goods were sold on CIF basis to unrelated customers in Germany for 10.7 crores. So what Xenon India Limited doing? Xenon India Limited sold goods to unrelated party. For rupees 10.7 crores. Unrelated party. Goods are sold for 10.7 crores. And that happened on CIF basis. Ocean freight and insurance of 18 lakhs and the company also provides after sales support to 12 lakhs to customers. See, functional difference 1. How much is freight and insurance? Freight and insurance is 18 lakhs. Next. Here freight on board, here CIF basis. Because of CIF basis, price will be increased. Of course, whenever you pay insurance and freight, automatically sale price will increase. So how much? The difference is 18 lakhs. Next. Second functional difference. Whenever goods are sold to unrelated party, no sales support. But whenever goods are sold to related party, there is a sales support. There is sales support. Okay. Now, how much is that support cost? Support cost is 12 lakhs. This is functional difference 2. Functional difference 1 is FOB and CAF. Functional difference 2 is sales support. Now tell me, in this entire transaction, whether 9.8 crores is influenced or 10.7 crores is influenced. 9.8 crores is influenced. 10.7 crore is uninfluenced, correct? You have to take uninfluenced price. How much is uninfluenced price? Uninfluenced price is 10.7 crores. Okay. And this uninfluenced price is at CAF level and no warranty, correct? Sorry. CAF level and sales support also. CAF level and sales support. Tell me one thing. Whenever you do transaction with the related party, did you give sales support? You did not give sales support. If sales support is not given, obviously that sales support cost is reduced. Whenever sales support cost reduces, selling price also reduces, right? So we need to reduce sales support cost. Sales support cost. How much is sales support cost? Sales support cost is 12 lakhs. So if we reduce 12 lakhs, how much? $10.58 crores. Okay. That means 10.58 crores is uninfluenced price with no sales support, but at CAF basis. That means what? If there is sales support, price is 10.7 crores. If there is no sales support, then price is 10.58 crores. That's what now. If I have to give after sales support, I will increase the price. If I am not required to give after sales support, I will not, instead I will decrease the price. That's why here the price is decreased. Next. Here goods are on CAF basis, but for related party, are you selling goods on CAF basis? No. For related party, you are selling goods on freight on board basis. If for unrelated party also, goods are sold on freight on board basis, then insurance and freight will be borne by unrelated party only, correct? So that insurance and freight also we need to reduce, less insurance and freight. How much is insurance and freight? Cost of insurance and freight, 18 lakhs. 18 lakhs. So then 10.4 crores. This is uninfluenced price. Uninfluenced price with no sales support and on FOB basis. See, for related party, you are selling goods on FOB basis and you are not giving sales support, no sales support. For unrelated party also, if there is no sales support and if goods are sold on freight on board basis, then uninfluenced price will be 10.4 crores. Are you able to understand? So, how much is the arm's length price here? Therefore, arm's length price is equal to 10.4 crores. But how much is actual sale price? Actual sale price is 9.8 crores. 9.8 crores. So how much is the difference? 0.6 crores. 0.6 crores will be added to income of the SSC. That means he should ideally, with no sales support and with no warranty, he should, with no warranty and freight on board basis, he should have sold goods for 10.4 crores. But is he selling for 10.5 crores? No, he is selling at 9.8 crores. Intentionally, he is reducing the sales. How much sales he reduced? 0.6 crores that will be added to income of SC. Are you able to understand? Now I hope you understood CPM, cost plus. Okay, remaining methods we are going to see in part 2. Okay, thank you.